Hey everyone, this is OJ here coming to you with another informative episode of Crypto Corner. Today I will be talking a little bit about trading and some of my tips on what you can do in order to minimize your trading losses, because I know that as you start trading in the beginning it's really difficult. You are bound to make mistakes and you are bound to make losses. So if you're new to trading, and even if you're not very new, this is going to help you. Make sure that you watch it until the end. I actually found this blog post yesterday, and it is having some statistics on how many traders are making losses and stuff like that. So apparently there's still many people who get caught up in trading and over trading specifically, and they're making a lot of losses. I mean, some of these statistics are absolutely staggering. 90% of day traders are losing money, and yet there's still so many people who are day trading. I don't understand why. The average day trader actually loses money by a considerable margin after adjusting for transaction fees, and this is because with day trading you have so many transactions, so many trades, buying and selling, usually for small amounts and usually with very small margin, with very small profit, 1-2%, sometimes 3-4% if you're lucky. And you're making these multiple trades during the day, and at the end you have fees and everything. And with cryptocurrencies, we know that the market is unpredictable. Sometimes you have days where in one day you have a 20% drop, 30% drop, 40% drop. Many of the coins over the last few days, right now this is April 2021, literally a few days ago we had a massive drop on all of the coins, not just Bitcoin. Everything went down by 15-20% in one day. Then the following day there was another 15, some of the coins another 20%, 19, 18, 20% losses. So in a matter of 2 days some of these coins were more than 40% down. So you're making all of these day trades, you're making 1-2%, 1-2%, 1-2% on so many trades, and then the next day you wake up and it turns out that the market has dropped by more than 20%, wiping out all of your profits from the previous day or from the previous days even. Also, emotional attachment. This is the biggest enemy of any trader. 99% of the people who are using emotions when they trade are making losses, because you cannot get emotionally attached to any of the assets that you have. You need to leave all emotions aside. I'm going to give you 20 tips on what to do to avoid mistakes. This is going to be one of them, but many people cannot help but use emotions, get emotionally attached to an asset, especially if that asset gives you a profit in the beginning. And then as time goes by, this asset may start declining in price and losing money for you, losing capital. But if you're emotionally attached, you will be one of those hodlers, and that is not a good idea for traders. Also, even traders, this is one of the most surprising statistics for me that I saw in that post. Traders, even with up to 10 years of negative track record, are still continuing to trade. That means that even though they see the signs that they're not good at it, they see evidence of the fact that they're not good at trading, they still continue trading. This is such a shocking statistic for me. Also, another one, the average individual investor underperforms a market by 1.5% per year, and active traders underperform by 6.5% annually. Now, this may sound like not a big deal to you, but what I'm basically saying is, and we saw that last year with Bitcoin and Ethereum. Bitcoin went up by 380%, Ethereum went up by 440%, or whatever, it may be 460%. Whatever it is. If your portfolio did not perform at 300 or 400%, did not go up by 300 or 400% last year, that means that your trading is no better than just purely investing and holding these cryptocurrencies. So if you did not turn more than 300% last year profit, then you were doing something wrong. And what you were doing wrong is basically trading too much. Because if you simply left your money in Bitcoin and or Ethereum, and many other coins as well. I mean, Chainlink went by thousands of percent. I'm not even going into the other altcoins. I'm only talking about Bitcoin and Ethereum being the two top cryptocurrencies, but many other altcoins actually went by thousands of percent over the course of the last year. So if your portfolio didn't do this kind of profit, you did something wrong. And this is trading. And you traded wrong. Also, this is the main statistic that they have. This is actually what caught my attention, and this is why I read the rest of the article. Among all day traders, nearly 40% day trade for only 1 month. So that's almost half of them only trade for 1 month, they make losses and they're out of the game. Within 3 years, only 13% are still continuing to day trade, and within 5 years, only 7% remain. Only 1% of them actually make a profit net of fees. And this is why we started with 99% of them making losses. So these are just some statistics that actually prompted me to make this video. So let's go into my actual tips. And what can I share with you from my personal experience? Of course, this is not investment or trading advice, but this is literally my personal experience and what makes sense to me. And what could help you. I'm not going to tell you exactly what to do, but I'm going to give you all the mistakes and things that I've personally done and other people are doing, and what I've discovered to be really important to know before you start trading. And most people don't actually take the time to learn things before they start trading. They actually think that they will learn trading as they go along, which is a mistake. Well, the first one is trade less. Why? Because, as I said, day traders are actually losing money. And if you want to be profitable in your trading, you need to perhaps go for a different style of trading, like position trading perhaps, which is what I'm personally doing. I place far less trades and I'm waiting longer term before I actually make a sale. This is why in my videos, a lot of the time, I'm analyzing coins, and you see that I'm looking at the daily chart. Sometimes I'm looking at the weekly chart. Most of the time, I'm talking about what will happen in the next few weeks and the next few months, rather than what will happen in the next few hours or tomorrow. And this is really because I'm placing position trading. I'm waiting for bigger market moves, and this is how I'm making bigger gains. I would hold a coin for 3, 4, 5, 6 months, sometimes even longer, and I would make a profit of 300, 400, sometimes more %. And if sometimes I do swing trading, which is much shorter term, it's a few days to a few weeks, where I would buy a coin low and sell it at the first pump or something like that, and I would make maybe 30%, maybe 40%, sometimes even 100% from swing trading, from shorter term trading. But I never really bother with day trading, where you actually buy a coin and in a few hours you sell it for a profit of 3, 5, 6% or anything like that. And in this way I trade less, but I'm actually making much bigger gains. I have friends who are day traders, and they still to this day do not feel comfortable holding coins longer term. They don't understand, how can I hold a coin for 6 months or 8 months sometimes. They are used to literally selling it today, buying it today, selling it today, and sometimes selling it tomorrow or something like that. As soon as they see 3 or 4% gain, they're ready to sell it. This is not really a good idea. Another thing that is really not a good idea is leverage trading. Now, this is when you're actually using borrowed money, when you are using a much bigger amount than you actually hold, because you're leveraging. So, some margin trading is an example of that. When you're trading with 5, 10, 50x, maybe even 100x, that can liquidate you, that can literally wipe out all of your holdings. And just a few days ago, with the market drop that we saw $10 billion worth of positions being liquidated. Most of them were leverage trading positions. There were $10 billion, guys, got liquidated. So, this is the easiest way to actually get your portfolio to be wiped out. The easiest way, by leverage trading. So I definitely do not recommend it. This is really just for the experienced traders, not for those who are still learning, who are new to the game. Definitely don't do it if you are not experienced. You have to be trading for a few years, I would say, before you go into leverage trading. This is my personal opinion, of course. You don't have to follow this, but it is what, from my experience, is what really makes sense. Also, do not gamble. The ones who are gamblers, the ones that would play random trades and would hope for a good outcome, they're the ones that are losing the most money. And, traders, of course, every trader has losses, but traders who are placing their buy and sell orders based on technical analysis or fundamental analysis are the ones that actually perform much better than the ones who are just, randomly buying coins. And even though we're in a bull market, randomly buying coins could help you, could be actually beneficial for some time, but there will come a time when the market will turn and you will get surprised and you will make big losses. I was a gambler in the beginning. This is how I know. Also, take profits. Take profits is my number 4. It should probably be number 2 or anything, but these are not placed in any ascending order or descending order or anything like that. Taking profits is really important on the way up, because now that we're in a bull market and you're making profits, you purchased some coin, maybe one of the coins that I shared with you more than a month ago, some of them are already more than 100% up. Well, this is a good time to take profits. As soon as you are able to recover your at least your principal amount that you invested in that coin, do it. So if the coin goes 100% up, in a period of time, a few weeks or something, you see that it's 100% up, well, you can easily take out the money that you invested in there, and you would still have that much more left that you can leave it. And if the coin goes even higher, you're making a profit. If the coin goes down, if the coin crashes and something really bad happens and it goes to zero, you've already recovered your principal money. You've recovered the money that you paid for it out of pocket, so you're no longer at risk. The only thing that you're losing is the potential to make a profit, but not your actual money that you invested in there. So as soon as you can, take profit. Diversify. This is another thing that we saw from these statistics. It is very important to actually have diversified portfolios. So not only cryptocurrencies. First of all, if it's cryptocurrencies, as I've told you many times, I sometimes have 30 or 40 cryptocurrencies because I'm diversifying between cryptocurrencies, but also I have other income streams. I have e-commerce and I have some other investments and things that are happening on the background. And of course, I'm running this YouTube channel and this is also profitable for me. And as a content producer, I have blogs and everything else. So I am actually having different income streams. And the money is coming from different places. So if cryptocurrencies tomorrow go in another bear market, and we did that, we had 2 years of a bear market where I wasn't really making a profit from my investments in cryptocurrencies. I was doing some trading as well, and I was able here and there to make a small profit. But in a bear market, for the large part of it, I wasn't making that much profit from the trading. I was making a profit from my other income streams. And this is why it's important to have a diversified portfolio, not only as an investment, but generally diversified income streams. So very, very important. DYOR stands for do your own research. Always do your own research. Many people are ignoring that and they lose money as a result, because they either get into a scam because they didn't research very well and they didn't realize that they're getting into something that is in fact a scam, or sometimes they just get into a bad project. It doesn't really have to be a scam, but it could be a project that doesn't have very good fundamentals, doesn't have a very good structure, or whatever it is. It doesn't even have to be crypto. There are many ways to invest these days in many different things, and crypto is just one of them. But investing without doing enough research and without knowing why you're investing in this, only because someone said on YouTube, even if it's me, even if I'm presenting a project to you, just because I like a certain project doesn't mean that it's necessarily the best one out there. So always do your own research, and I've said that many times. Use my videos as just the basis of your research and build up on it. One thing that you can actually do in your research, and this is something that is really important and everyone should be doing it these days, is join the community, especially if we're talking cryptocurrencies and projects that even I'm presenting to you on a regular basis. Here every week I am finding a new project and I'm presenting it to you. Always join the community of these projects and get some real feedback from the actual people who are involved. I remember that I was researching a project not long ago, and I was really impressed because on paper everything was looking great. They have been in operation for a couple of years. They had more than 50,000 customers. They were running a trading bot as well, and some other different services that they had. But I think the trading bot was their pride because they had more than 50,000 users specifically for that. And I was going to promote it. I was going to create a video for that. But first I joined their Telegram group and I started chatting with some of the people. And then I found out that many people were not happy with this project, something that I couldn't see on any reviews online, or of course on their website. Everything was looking great. They had licenses and everything was really a good project. I didn't present it to you, but it turned out that people were not happy about it because they had invested Bitcoin and Ethereum in this project in the beginning, and then that project issued their own cryptocurrency and they started the payouts in their own cryptocurrency. Well, people were investing Bitcoin and Ethereum and they wanted to get back Bitcoin and Ethereum. They didn't really want to have some new obscure coin. I mean, sometimes these new coins are actually performing much better than Bitcoin and Ethereum, but I guess in this case that didn't really happen. So people were really complaining and everything, but only after I got into their community was I able to find this out. And then of course I didn't promote it and everything, but you wouldn't know this unless you join their Telegram groups or some other, maybe Twitter as well. And also look at forums and stuff like that. Definitely do your own research and join these different communities. Okay, the next one is don't be a blind bull. Well, all markets are actually cyclical. You cannot only have something going up, it doesn't. And when we talk about crypto, well, we already know we had a super bull market throughout 2015 to end of 2017. Then we had a bear cycle that was going on for 2 years. 2018, 2019, both of these years we had a proper bear cycle. So be prepared that at some point the market will be turning and you will have to be selling. You have to be ready to hit the sell button, and ideally you will be selling everything. I mean, some things like Bitcoin, for instance, we can hold longer term, but not much else. I'm personally going to exit from most of my holdings, even on Bitcoin, when this bull market ends, and I will definitely be exiting all of my altcoins. I've often talked about this. For me, long term is really just Bitcoin when it comes to crypto. Everything else is medium term and sometimes even short term. But then again, my short term is not a day or two. My short term is a few weeks to a couple of months. My medium term is a few months up to a year, and my long term is a few years. So my long term is really Bitcoin. My maybe you can say Ethereum as well, because I have been holding Ethereum now for a few years. Everything else is either medium term or short term. Sometimes I'm getting into coins just for a few weeks, and I usually post this at the beginning of each month. I make a video where I'm talking about my top coins for this month. So this is my short term. And then I had some medium term coins that I recently announced. These are for a few weeks up to a few months, perhaps 3 to 4 months. And then I have some longer term and long term, which is just Bitcoin and Ethereum. The next one is risk management, and this is also very important because many people are not really good at doing risk management, unfortunately. So stop loss orders is something that you can actually use in your risk management. For instance, you buy a coin today, it starts going up. In the next few days, it's gone up already, maybe 10-15%. This is the perfect time to set up a stop loss. And you can set up your stop loss to be close to the price that you bought it at. So it is lower than what the price is today. But if the market turns, something happens and it crashes, then you will be selling that still at a profit or a small profit, but you're not gonna go at a loss. I did a specific video dedicated to these orders, explaining them and everything, so make sure that you catch it. And also, if you're watching this on YouTube right now, you will see a pop-up with that video, so you can click and watch it, or you can just find it in the description below and watch it after this video, because there's still important things that I'm sharing here with you, so don't stop watching this video just yet. Another way to do risk management is by having smaller positions in the coins that are much riskier. So if it is a obscure altcoin that is low cap coin, you don't really know much about it, it's not on many exchanges yet, you're hoping that it will make a big performance over the next few weeks or few months because it might be getting added to a big exchange. You heard some rumors or someone advised you to get it, but it is not a coin that is very well known. That is a risk investment. So if it's going to be a riskier investment like that, then just have a smaller position. Sometimes I would buy a coin like that for maybe $100, or I would put $200-300 in a coin that is like that, up to 500. But I wouldn't go with the thousands, because if the coin performs really well and it does, you know, a few 100% or 1,000%, which is possibly what I'm expecting if I'm getting with that coin, then, you know, a few $100 will turn into a few $1,000, and I'm going to be quite happy with that. I don't really need to make, you know, to put $10,000 and to make it into $1 million. I don't need to do that, because at the same time the risk is higher. So I don't want to be risking $10,000. I want to risk just a few hundred. And this is good enough if the project is really taking off and it does more than 1,000%, which we've done already with some of the tokens that I shared with you here, like KSM, like Chainlink. You know, with these coins, even if you just put $200-300, by now you will be sitting on more than $10,000 with each of these. So this is already good enough profit, guys. All right, being early. So being early basically means that you are finding about projects early on, and this is tied in with the previous point. You are and I'm finding on projects early on, and I'm sharing them with you here, because if you are in the early adopters, in the first stages of developing this project, and you find it, or you know, in pre-sale and stuff like that, you can really make thousands of % gains. But this is also in the category of the riskier assets. So we can compare this to angel investors. These are people who are investing in a project in very early stages, before there's any performance, before they know that this project for certain will be bringing them profit and it will be performing well, but they're taking the risk. And some of these risks, you know, they're high risks, but they also, the payout is much higher. So taking a risk like that could actually be very beneficial, but it could be also very detrimental to your portfolio. So if you're going to be doing this and you're getting early into projects, at least don't do it with very big amounts. Do it, you know, be sensible about it. And you know, it is called risk capital for a reason. Okay, signals. These are trading signals. You know, there's maybe many Telegram groups and on Twitter and even Instagram, I see people promoting signal groups. Typically for me, this is a no-no, because first of all, you are relying on someone else's technical analysis, and you're not learning anything. And if you want to be profitable in trading, sooner or later you have to learn it. You have to actually know how to do it yourself, because if you're relying on these signals, okay, maybe in the beginning when you start, you want to make a profit faster and you don't have the time to be learning, you need to start making money straight away. Okay, I get it. But in the meantime, learn about it, learn how to trade, because at some point this trader will disappear, and sooner or later they all do, because they, you know, they make some money and they move on, they get burnt out, or maybe they make mistakes and they get liquidated, and then they can't really continue. Maybe they make mistakes and they make you losses as well, so you stop following them. There's many reasons why a trader can disappear, or why trading signals may not work for you after some time. You know, that trader's style might actually work for them but not work for you. You know, maybe that trader's style will not apply to when the market turns. You know, maybe that trader was good in a bull market but not so good in a bear market. So there's many reasons. I don't recommend that you follow signals. Also, Another thing I don't recommend is to chase the top or chase the bottom. Don't try to time the market. This is also not a good idea. Nobody can know exactly when the top is. We can assume where the top is, especially if we are doing technical analysis based on previous charting and we see where the coin has been in the past. We can establish some resistance and support zones. But if we are in price discovery, like we are with many coins recently, if we are in uncharted territory, we don't really have a previous top to actually base any prediction on, then chasing the top could be quite a risky business, and I don't recommend it. Also chasing the bottom, it's actually much better to be following the trend. And this is quite a cliche, the trend is your friend, but this is basically what we mean. Find the trend and follow that trend. If we see a breakout, if you are buying, then you're looking for a breakout on the upside, breakout from a wedge pattern or a symmetric triangle, whatever it is. There are different patterns and everything. A breakout is much safer to be buying than buying the coin when it's going down. Do not try to catch a falling knife. When a coin is falling down, you don't really know for sure that it will be stopped at the first support level. It could be stopped at the lower support level. It could even break the 3 support levels and go all the way down to the 4th one. So unless you are certain already that the bottom is in, that it has already bottomed and is now going up, it's breaking up from a resistance or from a pattern, this is the time to be buying it. Even though the bottom price will be lower than your price when you buy it. If you are catching a trend and this coin is starting to go up, then you're still making a profit, and this is more important than try to buy the bottom, because the bottom could actually not be that bottom. It could go much lower than you think. So it's the same with chasing the top. Sell it on the way up. Sell it in different portions as it's going up. As you see some really good gains, start selling it. Don't wait for the top. Or even better, maybe you wait for the top, you see the top has formed and it's now starting to correct, sell it on the way down. This is also beneficial, and I've talked about this in previous videos as well. Also, another one that I don't recommend is to get into low cap coins with low liquidity. Low trading volume, low cap. This could be beneficial to those who are more experienced and know how to spot these coins. But if you don't know much about this coin and you're only buying it because someone else recommended it, that is a recipe for disaster, because low cap coins, especially with low trading volume, they're much easier to manipulate. So you could actually get manipulated. You can follow someone who is actually shilling that coin for personal gains because they invested in it and now they are sharing with their millions of followers or hundreds of thousands of followers. I've actually seen a lot of the very, very famous YouTubers. I'm not going to name names here because this is not about tarnishing their reputation or anything. And I've been thinking about doing a video where I expose some of them, but I don't really follow every video that these guys are doing, but I have spotted a few times now when in the first hours after they post the video, that coin is pumping so hard only to retrace down to correct by 40 or 50% or even more straight after that. And it doesn't really go much higher than these first few hours when everyone was buying it, and now they become back holders. So not a good idea. Also, accepting losses is something that many people are struggling with, especially when they're new to crypto and trading in general. When you're new to trading and crypto investing, you want to invest in something, you want to see a profit. As soon as you see losses, you feel, oh, this is making me a loss, I'm gonna wait for it to go up again. And sometimes they don't really go up, especially if we're having a turn of the trend. And if you're new, if you are not very experienced, you may not realize that the trend is turning. So you can keep holding and holding. You should accept losses, set up a stop loss order for, maybe 10, 15, 20% loss. And you better, sell it at 15 or 20% loss, then wait, and after a few days, it's 40 or 50% down. This is what even happened with some of the coins that we currently had, in this drop. The first day the drop was 12-15%. The next day was another 18-20%. It's okay to be underwater in a bull market because In a bull market, you know that you're not going to stay underwater for too long. But if the trend has turned, you can stay underwater for years. And with some of my tokens during the bear market, with Bitcoin and Ethereum, okay, with Bitcoin not really, but some with my Ethereum, I had bought some Ether, at higher prices. When the market was correcting, during the bear market, we went down so much that we actually, for some of my Ether, we went below my buy price. So I was underwater, and it was for more than a year, but it was Ether. I knew it's one of the best tokens out there, so I'm good. But if you are holding some of the more obscure coins, then not a good idea to be underwater. So accept losses early on, exit, and then wait it out. If there is another bull run, then you can get in during that bull run. Don't try to hold it for too long. Pump and dump groups are a big no-no, because pump and dump groups, this is very similar to what I mentioned just earlier. People shilling a coin that they have already purchased low, they have already invested in that coin. Now they're shilling it to hundreds, thousands, or maybe even hundreds of thousands of followers. All of these people, or many of these people, are rushing in to buy that coin. It creates a pump. The person who is shilling the coin is now selling at the top during that pump, and as they start dumping big amounts of that coin, the rest of the buyers are now they're being confused. They think, okay, is this just a minor correction? Then they're seeing it going down even more. They realize, okay, this is not just a correction, we are dumping, let's start selling. They start selling, everyone is rushing now to sell. It kind of catches on, and it becomes even faster. The drop can be so fast that you might not even have time to sell your coins without going into a loss. So pump and dump groups are actually creating more losses than profits, and they're creating more back holders than profits. So definitely don't do that. Cold storage is very important. Don't treat exchanges like banks. They are not bank accounts. They are not protected. There is some security, but still, many exchanges have been hacked throughout the years. I did a blog post recently where I listed all of the exchange hacks that are known to me, that I found in my research. More than 62 entries I have on that blog, and I will keep updating it. This is for the last 10 years. Pretty much every exchange that you can think of has been hacked. And I think there's only one or two exchanges that I know personally that I'm using, that I know of, that have not yet been hacked. Everything else has been hacked. Many of these exchanges never recovered. They literally went out of business. People lost their money. Some of these exchanges more recently, like KuCoin and Binance, and bitmex, managed to recover most of the funds or all of the funds, but still many exchanges never recover, and people never get their money back. So move your money, especially longer term holdings, move them into cold storage. Do not hold them on the exchanges. Do not treat this as bank accounts. Know what you're buying is the next one. This is very important. This is also why I published my book, Learn Crypto, because if you're new to cryptocurrencies, you need to at least understand the basics. You need to be familiar with what you're investing in, what you are buying. And as you start investing in different coins and diversifying and everything, you need to know these coins. You need to know why you're buying these coins. What is it about this project that is actually going to make their token or coin go up in value? Or what are the tokenomics of that coin that it will go up in value? Is it really going to go up in value? This is also going hand in hand with DYOR, do your own research. You need to know what you are buying, at least basic understanding. This is why we see that some of the older traders are not getting into Bitcoin. They don't understand it. They still reject it because they don't understand it. And this is okay, but we see many investors who understood Bitcoin, who previously were against Bitcoin, and later on jumped in and started investing in Bitcoin. Most recently, Elon Musk was some of them, and Twitter CEO Jack Dorsey. Both of them started talking about Bitcoin in the last few months and got involved with Bitcoin in the last few months. Not that they were not aware of it before that. They just didn't understand it very much, and they were kind of waiting for Bitcoin to actually prove itself. Also, another thing that you need to be aware of is the market manipulation. There is a lot of manipulation happening on the markets. All of the markets are having that. Stock market is actually notorious for being manipulated. There's a lot of insider trading in there. Gold and silver markets are also being largely manipulated, by the huge whales that are holding the majority of this. So with crypto is the same thing. We have whales, then that's how they're known, big investors that have huge amounts of Bitcoin, and they're manipulating the market whenever they can. Most recently, the most recent crash in Bitcoin was actually started as a market manipulation, because we saw it happened on a Sunday, and the weekends are usually a very good time for market manipulation, because most of the big traders, corporate traders, big companies and institutional investors that work with huge amounts, they are not trading on weekends. Most of them, they don't trade on weekends. So weekends you have a lower volume, and as with lower liquidity, lower volume, you are open to manipulation. It's much easier to manipulate a market that is trading in just a few million than a market that is trading with a few billion. Market manipulation is happening. You need to be aware of it, and hopefully by being aware of it, you will be spotting this type of market moves that are due to manipulation rather than organic, and you will not get scared and panic sell. This is also very important. Risk capital. Maybe this I should have started with this one actually. I don't know why I placed it at number 19, but as I said, they're not really going in any specific order. Everything that you're trading with should be risk capital, not your life savings, not your borrowed capital from credit cards or friends or anything like that. You need to allocate only risk capital for trading, because this is why it's called risk capital. Trading is risky. You're going to be operating with capital that is allocated for risk, not just your money that you are depending on. This is why I'm trading with only, I think right now it's even less than 10% of my capital I'm trading with. Some people trade with only 1% of their overall capital. And the last one, emotional attachment. Well, this is one of the most important ones as well. I mean, there's so many. Emotional attachment is the biggest enemy to any trader. Do not get emotionally attached. Do not hold a coin because you personally like it. That is not a reason to, if you like the project, that's okay, but that's not a reason to hold the coin, because the only reason should be, is it making you a profit or not? If it's not making you a profit, exit it. I was holding Dash for the first 2 years of my, when I started diversifying a few years back. Dash was a very strong project, and it was really promoted very well, marketed very well online. So I got emotionally attached to Dash. I bought it at $4. It was 40, then it was 400. So, it was making me a profit. But as it started going down, I didn't sell out because I was emotionally attached. And I probably still have 2 or 5 or something like that of Dash somewhere in one of my wallets, but I did exit most of it because at some point I realized I'm being emotionally attached. This is wrong. This is not what I should be doing. And one bonus one that I didn't actually write here. Now it's time to actually grab a pen and paper and write this down. I didn't have it on a card, so you will have to write it down. But also as you write it down, this is better because hopefully you will remember it easier like that. Confluence of price action is very important. This is a very strong indicator that always works, or at least 90% of the time. You need to follow what is the price doing and what is the volume of the coin. If the price is going up and the volume is going up, this is actually bullish, because that means that people, they believe that the price is going to go up, and the fact that the price is going up does not stop them from buying. So you have increasing volume and increasing price, both of these going up at the same time, bullish. What if the price is going up but the volume is going down? Well, this is bearish. That means that as the price is going up, there are less and less buyers that are happy to buy this token at that high price. The demand is diminishing as the coin is rising in price, and at some point very soon perhaps that coin is going to hit a resistance. There's not going to be that many buyers now that want to buy it, and as the buyers are exhausted, the price goes down? What if the price is going down and the volume is going up? Well, this is bearish. Why? Because as the price is going down, the people are selling. If they're happy to be selling it as it's going down, that means that we have exhausted buyers. There's not many buyers, so the price will continue going down until it hits a support zone where buyers are actually happy to buy it and they step in and they change it. But while the price is going down with volume going up, this is actually bearish, so it is not a good idea to be buying during that time. But what if the price is going down and the volume is going down? Well, this is actually bullish because it means they prefer to keep holding their token. They don't really want to sell it, and this is why we are not seeing big volumes. And if that's the case, it means that, you know, people are optimistic and they're holding, and as they're holding, there's less liquidity provided on less volume, and that is a bullish scenario. It means that the price is most likely to revert and start going up because people don't really want to sell at the lower prices. They believe in that project. They know that this project deserves to have a higher price. This token, this coin is undervalued. So price going down, volume going down, this is a good kind of setup to be looking into entry points. Well, this is everything for today's video, guys. It is already quite long. I don't really want to make it any longer. If you liked it, please hit the subscribe or follow button, and if it's on YouTube, hit the notification bell as well, because you need to alert the YouTube algorithms that you're interested in this type of content. Otherwise, you will not be alerted and you will miss out on great content that I have prepared for you. I have some great videos coming over the next few weeks. Make sure that you are notified. Also, show your support by leaving a like and a comment below, and if you like the video, share it with someone else who would also benefit from watching it. Well, this is everything from me for today's video. I'm signing off, and I'm going to see you tomorrow in the next one.